Lucy, in recent months, most of the financial world have been running around like chickens with their heads cut off, panicking about China. You've been an island of calm. And in particular, you have said some positive things about the domestic Chinese car makers. Today, shares in those car makers are up. What made you so smart?
Well, I'd love to say it was that I was so smart, but there has actually been a new policy. Just to backtrack a little bit into the history as to why we've been a little bit positive in recent months, despite the fall in absolute sales volumes in China, is that the Chinese automakers have been gaining market share. Great Wall, for instance, SUVs have done very well in China, and so the Chinese manufacturers have managed to capitalize on this trend when the international marques haven't. And there's also been a shift towards more affordable luxury. So those two trends have kind of played well towards the Chinese manufacturers.
Right.
Today, the policy was that there's been a tax cut on smaller literage cars, smaller engine cars, so 1.6 litres and below. They will halve the tax. Sales tax.
And that'll favor the domestics as well, because they're smaller cars than the Audis of the world, say.
Exactly, exactly. And so the domestic manufacturers have about 80% of their sales on average from the smaller engine car. Meanwhile, also, it plays to the domestic manufacturers' strengths, this tax cut, but it is a short-term one.
Yeah, I mean, I had a couple of questions about this. One, it's sort of protectionism by other means, but that seems fair enough, it's stimulative. But what about China, given its pollution situation, does it really want to stimulate driving of more cars?
Well, that's an interesting point, because the less well publicised bit, because it's less quantifiable, is the fact that they want to encourage more use of new energy vehicles. So they're removing restrictions on sales of new energy vehicles. Now, that's a bit woolly, but it includes things like license plate restrictions. So in certain cities, you have restrictions on certain days of the week, odd and even numbered license plates. In Shanghai, you have to bid to get a license plate, for instance. So my understanding is that they will remove those restrictions on the new energy vehicles because they want to stimulate that. But as far as the economy is concerned, it's still a very small part. So really stimulating that as an industry wouldn't do as much for the economy.
So sitting in the outside world, trying to look for treasure in the rubble of the Chinese stock market, what does this change make interesting? Are we buying the car makers here?
Well, I think one of the reasons that the stocks went up in the H-share market, and there was a difference between the moves in the H-share market and the A-share market, is that there's a lot of short covering went on
in
there.
Hong Kong.
In Hong Kong, correct. So the stocks are still reasonably cheap because they're on single-digit multiples, but buried in the announcement was also a section on car sharing and car rentals. And it's still very young days in China for that, because, you know, you want to own your own car. You don't want to be driving around in one that you've rented or driving around in one that somebody else owns. But there is a company that is geared towards the rental and the sharing economy, or chauffeur services, and that's Car Inc., which is also listed in Hong Kong. And interestingly enough, that stock was down today. And I think in the long run, that's probably one of the bigger beneficiaries, is that sort of rental and sharing economy is a much more positive outlook, and it's on similar sort of multiples to the actual car makers, who will still see a lot more competition in the long run.
Thanks.